Hey everyone, hopefully you're having a great day. My name's Andy. My channel's Finding Value. If you guys like making money, if you like looking at investment opportunities, subscribe to the channel. I'm going to talk about the U.S. housing market here. This is a driver of inflation. At least that's my opinion. It's 50% of commercial bank lending. Therefore, that lending, when it goes into existence against new homes, it is inflationary. So I like watching and keeping up to date on the housing market. That's what this presentation's about. I'm going over an article, just going to read some quick blurbs on it. So this is the U.S. housing market. It was published April 5th, 2021. Will sales or prices crash? Going down here, just going to move down. In March 2021, the median home listing price reached an all-time high of $370,000, up 15.6% compared to last year. So obviously the gains are quite massive and are very strong. Another thing I want to talk to, home building will continue and new homes will pile up a bit, which will slow down the rate of price appreciation. Existing home sales dropped to a 6-month low in February 2021, lowest level since 2020, to an annual rate of 6.22 million. A drop of 6.6% from January, according to the National Realtors. That's because they don't have any homes to sell. So going on down, we'll go in here. We've got realtor market data for the week right here. First 2 weeks are in March, up 4.5% year over year, up 14.2, 15.6, 17.2 in terms of median listing prices. Killing it. Look at the total listings. They're all down. And the time on the market, it's moving even faster. 4 days, 7 days faster, 8 days faster, 9 days faster. We're getting to a very low time on the market, where I think these are going to have to steady out at some point. You can't just, it's not like it's going to go down to 1 day or 5 days or something like that. They're talking about the housing demand will continue to surge due to several factors. For example, the millennials have aged into their prime home buying years, and they are now the fastest growing segment of home buyers. In 2018, millennial home ownership was at a record low, but the situation has changed markedly. Exactly what I say on this channel about the demographics and the millennials coming up in home buying years. They talk about it right here. They're no longer holding back when it comes to home ownership, according to the National Association of Realtors. The generational trends report, millennials make up the largest share of home buying population at 38%. The older millennials aged 30 to 39 making up 25% of that, and younger millennials making up 13%. So they're going out there, they're buying homes, they're having families. Exactly what I thought they would do. So that's good. It says another key finding is that the renter growth will be more than twice the pace of homeowner growth from 2020 to 2040. Between 2020 and 2040, there will be 9.3 million net new renter households, a 21% increase. So we are not only increasing the home ownership rate, we're also increasing substantially the renters. So we've got massive renter growth. The current extreme demand that is reflected in sharply rising prices can be attributed to the pent-up demand for home purchases from the March-July period, when a great part of the country was in total lockdown. I'm going to keep going down here. They were talking the expansion was driven by negligent lending. That's the old housing boom. This time, in terms of lending standards, it is different from last time. Coming back, while we still face economic and health challenges ahead, it is no doubt that the nation will continue to recover from this pandemic, and an improving economy will continue to prop up the housing market competition. Industry experts believe the housing market will remain strong and is set to break more records in 2021. Mortgage applications decreased 2.2% from 1 week earlier. The refinance index decreased 4% from the previous week and was 39% lower than the same week 1 year ago. Coming on down, at the current average rate, you'll pay principal and interest of $431.37 for every $100,000 you borrow. So talking about borrowing and mortgage rates. New single-family home construction trends. According to Urban Land Institute, real estate market conditions and values in the U.S. are expected to rebound and trend higher in 2022, with single-family homes outperforming the other sectors such as commercial, retail, hotel, and rental. Despite high buyer traffic and strong demand, builder sentiment fell in March as rising lumber and other material prices pushed builder confidence lower. Supply shortages and high demand have caused lumber prices to jump more than 200% since last April. The index is currently at a level of 82, down from 84 last month and up from 72 1 year ago. New residential home sales and prices, you can see that down here. However, demand remains strong as prime buying season begins to heat up. It says inventories, meanwhile, remain tight with 312,000 new homes for sale, an increase from January's 307,000. That represents about a 4.8 month supply. This is 2021's hottest housing markets. Here they are here. The weird thing is Colorado Springs, of where I'm at, is actually up more than these guys. But we are a smaller city, I think, compared to some of these. These are much larger cities. Mortgage delinquencies says there's a backlog of foreclosures building up due to this moratorium, and no one knows how big that backlog is until the government programs expire. The foreclosure backlog comprises three types of loans: loans that were in foreclosure before the government's moratoria, loans that would have defaulted under normal circumstances, and loans that would have default due to job losses induced by the pandemic. Foreclosure statistics. There were a total of 11,281 U.S. properties with foreclosure filings, default notices, scheduled auctions, or bank repossessions, up 16%. Here, I'll pop in back here. Nationwide, 1 in every 12,182 housing units had foreclosure filings in February 2021. Lenders started the foreclosure process on 6,000 properties. This is really not that much in terms of sheer quantities in relationship to the real estate market. Lenders started the foreclosure process on 6,000 U.S. properties, up 15% from last month, down 78% from a year ago. Down 78% from a year ago. There's not many people foreclosing. The following states saw declines in completed foreclosures. There's Colorado, that's where I'm at. Utah's pretty low, all these going down. Rental market trends, I'm not too worried about that. We'll keep busting through here. Very strong. Residential vacancies and home ownership rates. We're going to fly through this. Housing market trends. Whether this momentum can be sustained depending on more inventory becoming available, as well as any movement in interest rates, which are expected to slowly uptick in 2021. Last month, the pace of newly listed homes continued to slow with a decline of 20% over last year compared to the decline. It says national inventory declined by 52% over last year. Newly listed homes on the market declined by 20% nationally and by 17.9% for large metros over the past year. Housing trends for supply. Nationally, the inventory home for sale in March decreased 52%, a higher rate of decline compared to the 48.2% drop in February. There's the declines here. Just coming down. Housing market trends for listing prices are up 16%. Housing market trends for sales, just going to fly through here. Here it is. No housing market crash coming, signs of good recovery. The U.S. housing market is far from crashing in 2021 or 2022. In fact, it continues to play an important supportive role in the country's economic recovery. Current economic conditions resemble a swoosh pattern, with the initial impact from the lockdown followed by a gradual recovery as the economy reopens. So I agree with this. The market's not going to crash here, guys. There's no inventory. The inventory has to go far higher for this to have a crash. And these people on YouTube that are expecting a crash, they're on crack. I don't know what they're looking at. They must obviously know something that I don't. Maybe that's how to lose ludicrous amounts of money faster. Because honestly, I don't know what they're seeing. I don't know what the data. We have record low inventories. We've got homes that are selling in days and hours and minutes. They probably would sell before they even went up for sale. I know that doesn't even make sense, but here we have ridiculous offers right now. And I'm seeing that across the entire nation. This isn't just Colorado. It's happening in Minnesota, California, Arizona, Oregon. It's happening in New Jersey. It's happening in Boston, Massachusetts. It's happening all over the place. In Florida, multiple offers, $100,000, $150,000 over asking. They're sold before anyone even looks at it. What they're doing is they're going to the realtor and says, hey, look, what does it take to shut this down? They'll say $150,000 over, and they say, gone. I'll give you cash. These are all cash offers. there's just not enough homes. That's my take on it. This is going to increase inflation. It's going to spur a lot more new home builds, and the home builds are continuing to go up in price. We are in a weird situation where I think home prices could go up substantially. I think we're in a very bad scenario for those who want to purchase homes. And you've got all these people, more of the demographic of the millennials coming in, wanting to buy more and more homes that just aren't there. So I don't know how we're going to get out of this predicament, but somehow we're going to have to build our way out of it. And if all the supplies are short, I don't know how that's going to work out. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.